Donald Trump as the 47th President of the United States took place on Monday, January 20th, 2025. Mr. Trump made some big promises to the American people to get re-elected, while also signaling to the world that he would be looking at tariffs to rebalance trade in his drive to make America great again. 6 months in, what are the implications on markets and the economy in Singapore and in the region? Joining me today, Jeff Howie, market strategist at the Singapore Exchange, and Terence Ho, Deputy Executive Director and Associate Professor of Practice at Institute for Adult Learning, Singapore University of Social Sciences, as we dive into this question. This is Lens on Singapore. I'm Clarissa Montero. The tariffs the Trump administration has imposed on Singapore and the region, how much is it going to hurt in the medium term? Jeff first, from the perspective of investments.
Well, growth forecasts have been shed. That's the major thing that we start with. Now, how does that impact the stock market? So since April, we've seen the consensus estimate target price on our Straits Times Index actually reduced by about 3%. So the market is pretty quick to move on, I guess, readjusting their expectations for stocks based on how they see global growth. But I think one key element of this is the markets are pricing in that there will be a resolution that's mutually beneficial on both sides, that the US can broker some good trade deals by the July 9 deadline. So that's the consensus.
Okay, now we're going to take a look at it from the economy side of things. I have a personal representation of what the tariffs are already doing. I had put something in my cart in Amazon that was a rubber floor mat for the outside of my house. When I put it in my cart a couple of months ago, it was $10 US. Today I looked at it, that same mat is $60 US. So is that something that we're going to be concerned about in the medium term? Are we going to see these huge price variations on things that we want to buy?
Yeah, so besides the impact on global growth, and here when we talk about global growth, I think the OECD has just lowered its global growth forecast for 2025 to 2.9%, and that would be from 3.1% the earlier forecast. So clearly there's going to be a growth impact. And in Singapore as well, the official forecast for growth this year is going to be 0 to 2%, down from earlier 1 to 3%. So that's the growth aspect. But of course, many people are also concerned about the impact on consumer prices, particularly in the US, where many items could see a significant spike in prices as the supply chains reconfigure and sourcing of items comes from different countries. I think we're going to see a lot of variation as you speak of. But I think beyond the immediate impact of the tariffs on trade, on aggregate demand as well, it's really the business uncertainty that's going to also dampen demand, because businesses, of course, need certainty. Investor confidence has been rocked by the considerable uncertainty. So regardless of where the final landing point is, this is already affecting a lot of confidence.
Okay, so in the medium term, where are the pain points for Singapore?
Well, for companies, let's say your floor mat producer is, let's assume they're in Singapore, and you said you could buy that for $10, now you got to buy it for $60. The problem is that $50 per se is not going back to the producer. The producer might be priced out of the market and not be able to sell their floor mats anymore. So they're really concerned about margins and less demand for their products. Now that creates an element of uncertainty in their operations. So do they continue producing the floor mats into the next year, or do they start cutting back? And how does the bank feel about it? If they were going to the bank to get some debt or even possibly raise some more equity to produce more floor mats, are the underwriters of that loan now also a little bit uncertain and pulling back as well? So this is where it hits, mostly in SME enterprises that already have very competitive margins. So I think that's potentially where it could be a pain point, Clarissa, but we also obviously look to mitigate this.
Right. Now, Terence, Singapore is an open economy. Our government has said these tariffs would impact us because we are so open. How does that make us vulnerable?
Yeah, I think we would certainly be particularly vulnerable given our very high trade to GDP ratio and the importance of our export markets for our demand, aggregate demand in Singapore. I think the reconfiguration of the supply chains will also affect us quite significantly. So the outward-oriented sectors, the export-oriented sectors in Singapore will of course be the most badly hit. But everything could also slow down, including the domestic sectors, if there's this decrease in economic activity and really consumer confidence as well. But on the impact, just going back to prices, here the impact could be somewhat maybe different as well from the US, because there's also some concern that if China loses access to, let's say, the US and some other markets, whether a lot of the excess produce will be coming to Southeast Asia. I think that's also has a different concern maybe in terms of prices, but nonetheless a concern for some of the domestic producers in Southeast Asia as well.
It does affect everybody down the line, but then it also affects the businesses, as you said, that makes that mat. It also affects the competitors who might have been making a slightly better mat for $20. How does that affect the entire ecosystem for that one consumer and everyone that supports that $60 mat?
Yeah, I mean, your growth compression is the second order impact. So the first order impact is obviously your direct impact from tariffs on the actual industries themselves, but then that slowdown in growth that comes from the contagion impact of these mats that are being sold. Case in point with our stock market is our three banks that make up half the STI estimates are the combined loan book is around 1.1 trillion Sing dollars, and there are estimates that trade finance loans in that might be somewhere between 10-15%. Now that can be impacted, but also the rest of the loan book does get impacted by the secondary order type of impact where your growth starts to compress.
It's a vicious circle.
That's why the tariffs are really seen to be a tool, not so much tariffs for tariff's sake. So worst case scenario, as you're putting it, I think we kind of had a little bit of an inkling that there was a potential worst case scenario at work in April with all that volatility. So what did the US do? Put a 90-day pause right through to July 9. So I think it's obviously very fluid times, Clarissa, but at the same time, I think measured. I think the US basically wants more FDI in the US. That's obvious, and more FDI will help its fiscal deficit. More FDI will help its trade deficit and its overall debt issues as well.
I think there may be some constraints on the sort of policies that Trump can enact.
Sure.
First of all, price increases faced by US consumers, they could impact the Republicans in the midterms. And of course, the other very major factor is the impact of the markets. When there was a bond sell-off, I think that could have precipitated the 90-day pause.
Sure.
And likewise, the markets could constrain what they're able to do. In terms of reshoring to the activity to the US, this is something that maybe isn't so easy in the near term because of the uncertainty, right? So if businesses are going to make a long-term investment, they want some certainty about what the endpoint of the tariffs was going to be. And whether if they change their mind every few months or days, I think this is something quite difficult to move certain activities really back to the US.
There has been a push by the Trump administration, by President Trump himself, to get some of the big players, your Apples and such, to come back and manufacture in the States. Even if there is now a commitment to do that, how long will it take to build those facilities in the US before they can start manufacturing? And is that something that by the time they build it, will the environment be one that benefits America?
Well, it can benefit both. I mean,
I don't want to pay $9,000 for an iPhone.
Well, look, our top performing stock this year in the STI is Singapore Tech Engineering. Yes, it has that defence vertical, but prior to COVID, it also made a pretty big investment in the US, basically employing Americans to build global defence solutions and avionics and so forth. So that's an example that there is opportunity, but there's also opportunity for the rest of the world, if it doesn't feel comfortable investing in America, to obviously rewire their supply chains. I mean, you look at what China and Vietnam have achieved just over the last month or so with the transshipment and the trucks coming through China into Vietnam for the first time ever.
I think for certain investments, maybe some semiconductor plants, I think that might be feasible to look at in the US, but maybe for Apple manufacturing, from what I understand, might not be so easy. The cost would really be too high, and the shortage of enough skilled workers for that would also be a limiting factor. I would say that with the reconfiguring of the supply chains, there will be many opportunities, but we have to be quite nimble and resilient. It's no longer a single model where China is the factory of the world, but really the production and different parts of the production chain could be shifting around. And depending on the geopolitics and the policies, I think the MNCs will also have to see how they can reroute some of the production here and there.
So here comes the market and economy question. I'm wondering, what is the smart play? What are the circumstances for money making within the market driven by the economic circumstances?
I think there's one clear mandate: spread the wealth over many nest eggs. Really diversify across asset classes. For the moment, that has been the biggest common sense. And gold, for instance, has been seeing phenomenal demand in the ETFs here as well. Or even more diversified. The amount of activity in our Singapore dollar-denominated gold ETFs has been really strong. So I think spreading it over a number of asset classes has been one key important development over the last 6 weeks or so.
So the buzzword there is diversification.
Yeah.
How do you translate that into the economy and public policy?
Yeah. So we see a parallel between the sort of strategy for an investor and a portfolio to maybe at the national level, where Singapore already has a very diversified economy, and that always helps. So diversification, not just across the sectors of the economy, but also geographic diversification. So I think that's why Singapore and many countries in Southeast Asia are trying to build linkages with different parts of the world. So at the recent ASEAN summit, we had the first trilateral between ASEAN, the Gulf Cooperation Council, and China. And many European countries are also coming to build bridges in Southeast Asia to try to diversify away from dependence, let's say, on the US and certain of the traditional markets. I think we need more of that.
Now, according to a recent Singapore Business Federation survey, businesses in Singapore are already experiencing fallout from this global tariff war. 90% expect to see the effects on their bottom line by the end of this year. So, if you had to look at the crystal ball, Terence, how challenging will the rest of the year really be for these businesses? And what are some potential defensive moves that they should be making into the rest of the year?
Yeah, so I think it would depend tremendously on where the sort of markets are. Of course, the businesses that are mainly oriented towards Singapore, they may see some slowdown from the overall slowdown of activity, but those who have particular markets abroad, let's say the US, where they've already have this 10% baseline tariff for Singapore, they could be significantly affected, maybe even in terms of the supply chains and the sort of input that they get. So I think I go back to what Jeff said. It's really about diversification. It's about being quite nimble and pivoting.
Yeah, nimble is really important too. Cost efficiency is super important. Basically, reducing costs as much as possible, monetizing your assets.
But reducing costs is a frightening concept because as an employee, suddenly reducing costs is leading me to ask, is my job in danger?
Well, supposedly, you're in a good country because there was an IMF survey that came out and said 40% of jobs in Singapore are complementary to the AI wave that we're seeing. And I think AI can improve cost efficiency. That's more where I'm coming from, automation and so forth. But also pivoting to new growth industries is also, I think, really important, Clarissa, because as we all know, markets and economies, they evolve over time. What might be a mainstream consumer-like sector in 10 years might not have existed 10 years ago. And I think that is what China is trying to do in its economy now, really pursue demand-driven initiatives to drive consumer growth, where it's always in the past been more supply-side driven. And that'll be, I think, one regional growth theme that many companies across this region can tap into.
Terence, what do you think the Singapore Economic Resilience Task Force is really looking at as the largest challenge for them?
I think they were trying to have better and quicker sense-making. So it's not just the sort of political leaders involved, but also the business community, the likes of the National Employers Federation, Singapore Business Federation, the unions are there. So they want to get a sensing of the challenges, I think, that companies are facing, and sometimes the companies know faster than the government, and how the suite of policy tools could then be brought in to support them, whether it's in terms of the free trade agreements or other things that can be done to facilitate this. And I think particularly there's also a concern about the impact on workers as well. And good that you brought up AI earlier, because arguably in the medium term, the impact of AI on the world of work may be even more than the tariffs and uncertainty, because that's really going to transform the scope of jobs and the roles that human workers have. So I think, of course, this task force is very much focused on the tariffs, on the geopolitical situation. So the first step would really be to sense make, and then to see how they can respond more nimbly. But they also have a mandate, as far as I understand, to look at the slightly longer, medium-term drivers of competitiveness and growth opportunities as well.
The US dollar has been extremely dominant in global trade, but of late, it has been losing a little bit of its shine, yes? The question I have is, what impact could that greenback losing its dominant position have on Singapore and the region economically? Is there an impact that we should be concerned about, or should we be celebrating it?
Never not celebrating it.
No.
Well, at the moment, the weakness has been obviously driven by the concerns on US debt, right? That 36 trillion number that was touted a couple of weeks ago. That's why yields on the 10 years have stayed the same, around 4.4 to 4.5%, but your US dollar index has dropped around 3% since then. It's interesting. A lot of people have opinions on it, but I think it's just, it's all it is pretty much doing is a sign of the times. And at the moment, the sign of the times is that the US economy is headed for more recessionary risks at the end of this year, going into 2026. So interest rates are expected to be cut. Markets are still forecasting 50 basis points of cuts before we go into 2026. And I think that's pretty much consensus at the moment, that the US might feel more of that short-term pain in these trade policies.
I think many analysts are looking at possible further downside risks for the USD, given the economic outlook, I think, more than anything else. Yeah. Of course, in the sort of medium, longer term, some people are also pointing to a certain fiscal risk. The Moody's has just downgraded the US debt, joining the other two major rating agencies which downgraded them previously. But I think in terms of Singapore, I don't think we would be that much affected. Of course, maybe there are cheaper holidays in the US from the weaker dollar, but those who, of course, export and import from the US and receive US dollars and so on, or have to pay out in US dollars, they would feel some impact. But going back to the sort of broader picture also on US dollar hegemony in terms of being the reserve currency, I think that the position won't be eroded too quickly overnight. It's been already sliding in terms of the share of global foreign reserves that are USD for many decades. And maybe it will pick up a bit of pace depending on how the major creditor nations want to diversify the holdings. But there's really no sort of replacement for the US dollar in terms of the world's preeminent reserve currency.
Right. Okay, so crazy question. If I wait long enough, is my floor mat going to go back to being $10?
Gee. We should have bought that. You should have the floor mat here. We could have.
Well, had I bought it, I wouldn't be complaining that it's now $60.
Well, if the prices remain high, there might be a business opportunity there. Try to source it from somewhere else.
And try and find somebody else who makes it. So, should I wait?
Oh.
So despite all this talk of deglobalization, I think the global trade is still growing, albeit a bit slower than in historic terms. And I think there are different patterns of trade emerging. So I hear there's more South-South trade between the developing nations. And we could find that maybe there could be some opportunities to actually source things a bit cheaper as Singapore signs more free trade agreements and looks further afield to other markets for input as well as for exports.
Terence says wait.
Yeah, because there could be more floor mat producers and more choice.
And more choice, maybe even better designs.
Possibly.
We'll see. And on that note, I wanted to leave you with a quote that when I was doing markets with Jeff, I actually held on to. Warren Buffett, who very famously said, "Cash combined with courage in a time of crisis is priceless." And so, gentlemen, do you agree with that statement?
If it helps you sleep.
If you have Warren Buffett's bank
Well,
balance.
I don't know if the average retail investor would agree with that in Singapore. I mean, we've had something like 16 billion Singapore dollars of net retail buying since the end of 2019, and we had around 1.5 billion of that was just in those first weeks of April alone, basically retail investors scooping up the banks, DBS, UOB and OCBC at those lower, quick, reduced prices.
Given the still very strong demand for T-bills, I think there's a lot of sort of dry powder that Singaporean retail investors still have.
Yeah, it is, and actually, that's actually a really good point. Something we don't shout out too much about is retail investors are combining cash with gradual exposure to the market through dollar cost averaging, not going lump sum with all your money into the market, but dedicating a fixed amount to deploy every single month or every quarter or every week. And there's something like, we estimate around 100,000 accounts here in Sing that are basically investing like that.
That's certainly a very appropriate strategy given the uncertainty today we are seeing.
Yeah, because you don't want to risk, like you said, you don't want to risk buying your carpet at $60 and then it eventually goes back to $10.
Right.
You know, maybe if you could whap it out, buy a tenth of it this month, tenth of it next month, and just maybe, yeah, that's what you could do. You buy 10 carpets over the next 10 months. And therefore, if it does come back to $10, you've averaged out your price.
That would involve having Warren Buffett's bank balance.
Yeah, potentially.
I love the fact that I made you think there for a second, both of you, from your perspectives. A big thank you to both of you. Jeff Howie, Tara To, thank you for joining us. The conversation around tariffs is going to carry on throughout the Trump administration. I'm just hoping, as far as Singapore is concerned, we weather it and we come out on the other side strong. As a Singaporean, that's really all I want to see.
Yeah. And we hope the US does as well.
Thank you so much. I'm Clarissa Montero. This has been Lens on Singapore. Thank you for listening.